Most traders show up to the open underprepared and with too complicated of a system to execute in real time. I'm going to show you how I use ICT concepts to simplify all of that and how you can do the same in your own trading. You have to have a good filtering system. That means you're using all of the information from the higher time frame to determine what the session's going to be like. We're going to talk about two main types of sessions: a continuation of the prior session trend and then a reversal of the prior session trend. Those are really the two main components on any high probability day. Your main thing is going to be, are you in alignment with a higher time frame level? This can be a prior day high, a prior day low, and really where you are in relation to that. In Friday's trading, we can see right here we had a big down day after we reached for this upper area of resistance. The reason that this setup was a high probability trade is because we had data at 8:30 Eastern. That data provided enough momentum for us to see a move lower. This right here is what I would consider a break of data lows, where this acts as the order block. Now, a lot of traders might ignore this, not noticing that it swept out these previous highs, but that's a strong signature. A sweep of a prior high or a sweep of a prior low before the open is usually a good indication that the trade is simply getting people to bite on the wrong side and then running in the opposite direction. This right here is a perfect example of a continuation of the previous session trend. It also went in alignment with the idea that we swept out the high and then we're willing to trade lower now. It's one thing to know what a trade looks like, but how do you actually execute this? We can see right here, this is a high probability structure based on the playbook that I like to use is simply looking to trade outside of that first 5-minute candle. You can see there's a handful of candles right here that compose the 5-minute candle, and you eventually get that pullback. That first pullback can be entered on a couple different methods. I would consider a fib. After trading outside that first 5-minute candle, find a swing high, swing low, and you can pull back to 50% and you can enter there. This is a reasonable entry right here. You can see you have the 50%. That's your first possible entry. I think this is probably one of the cleaner entries. You can also couple that with the fair value gap. But really on a trade like this, I know a lot of traders are eager to put their stops super tight. They want their stop right above the fair value gap candle. But realistically, you could put it at the other end of the 5-minute opening range and then look to target something to the left. Expectations are going to be the biggest component to having a consistent trading system. What I always tell people to do is simply look left in their trading. If you do not see anything, just scroll up to a higher time frame. Eventually, you will find a level to the left. That can be a swing low like this, or even like this, right? These are your three main targets. From there, I would look to trade the continuation into these levels. That's my system. I'm looking to align with what the higher time frame is doing. I'm looking for an indication of where it's going, and then I look for an entry that has a reasonable structure in terms of risk. Now, what you should be doing is asking yourself, is there something in the market today that I can trade? And if the answer is no, you do not see anything very clear, your best bet is to stay out. Because what most traders won't tell you, the best trades are often the ones you don't take. Meaning, by not doing damage to your account, whatever you're working on at the moment, if you can preserve it, be very diligent about the trades you're taking, you will have a better chance at getting that next payout or moving on to the next stage in your own trading. So to recap, the best setups are going to, number one, confirm what market structure is already telling you. We do not want to predict where markets might go. We instead want to align with where they are indicated to go based on what's happening. We want the market to show its cards. At the end of the day, our job is not to predict, but rather align with a very easy trade. Consistent trading comes down to not catching the biggest move, but simply catching the easiest move. It's not a matter of being lazy. It's not a matter of not knowing, because simple scales and fancy fails. And most traders, probably you watching this right now, you think that if you learn more, you're going to be better. But the reality is you need to unlearn a lot of things and simplify. A base hit strategy will take you further than any sort of home run system. This type of trade might set up a couple times a week. So to keep your P&L healthy, focus on consistent base hit trades that align with a higher time frame. One setup will take you way further than 5 indicators will. You do not need more information or more statistics. You need to control your actions. So the best system is the one that you actually follow. Be more mindful about the trades you take, and you will begin to decipher the algo.